and one of the last sessions. So, it's kind of that spot, but we're going to make this very exciting panel here. And as the title says, we're going to hear from the investors, and I have two really experts here. Michael, thank you very much for coming, and Musab, great to have you back on. You still have to work before you can have your weekend. Michael, I want to start. So the whole idea here is we're going to talk about what people are learning by investing in the Global South carbon market. So Michael, I want to start with you. Just kind of give us your big picture. Why are you interested in carbon markets, and what are you doing in the Global South as VTOL? Yeah.
So, well, thank you very much for the invitation. I'm very happy to be here today. I think for those who don't know who VTOL is, so maybe I'll start with that because otherwise it might look incongruous. Yeah. So VTOL is the largest independent energy trader in the world. So we have a $500 billion turnover last year. So it's a very large company, but hardly anybody's ever heard of us. However, we're a big energy trader. We trade everything across the barrel. And for us, renewable energies, hydrogen, all these other elements are key in terms of the transition. And there's a big focus in VTOL on transition. And carbon markets, as has been mentioned many times over today, we think are a key point in that system.
Yeah.
We don't think they're the only point in the system, and I think lots of the criticism and opprobrium of carbon markets comes from people saying, well, instead of doing this, you're only doing this. We completely agree that you have to be doing this, and the residual end piece will be the carbon markets. We also think that carbon markets provide a pricing mechanism for investments and managing risk, and as was said previously by some of the bankers and Bill on the stage, they need that to release capital. But VTOL has been involved in carbon markets for years, so 15, 16, 17 years. We first went through the iteration with the EU ETS, where you could bring in carbon credits from projects in places like China, India, and other places. Clearly, this iteration of the carbon markets, as the sign says, is much more about the Global South. But when we rebooted effectively our carbon business, or carbon projects business about 3-4 years ago, it was very clear to us that we probably, instead of just being a trader in this market, had to go a bit more upstream and actually develop the projects ourselves. Why? Part of that is to do with this big question of integrity, this word that keeps coming back in. We needed to be sure that the projects we were buying, we had all the DD, we had done everything from the grassroots, and that we knew everything. And that whenever we sold them on to somebody else, if they came back to us and said, we've got a question about this, we've got a question, we could just go back, look at all the DD reports we did, all the third-party due diligence that was done, all the compliance reports, et cetera, and be able to provide that to the buyers. We expect, so Riham said 50 billion. I'm hoping, again, it's going to be multiples of that. I'm sure Riham does as well, and we think it will be as well. For a company of VTOL size, if this market stays at a $50 million, $100 million, billion-dollar market, it's not of scale. Again, coming back to our the size and the scope. And I think that that's true for everybody. And I think that we expect that to be the case. We're putting our money where our mouths are. So we're not just buying the carbon credits off other project developers. We develop the projects with partners, and we are determined to keep building this business, and we're committed to it for the long term.
So I want to come back to you about what are you learning, issues around quality and transparency. But Musab, so why is Saudi Aramco interested? And you were actually a bidder and winner, right, in the auction. So tell us kind of your philosophy as Saudi Aramco.
Thank you, Atul, and it's my pleasure to be in this very, I would say, high-profile, conference in the FII, first in history, I would say, for Global South. For Aramco, Atul, I think offset is complementary solutions. And I think Mr. Ibrahim Bouanein talked today about what are these 5 pillars for Aramco when it comes to the net zero by 2050. The first one is energy efficiency, and we are pioneer in reducing our carbon emissions to the lowest in the world today. We are 10.3 kilogram per barrel equivalent. And I think His Excellency mentioned the opening remarks yesterday. If the whole industry all together come to this level of carbon intensity, you will save 1 gigaton of carbon emissions, at least 1 gigaton of carbon emission annually. That's the size of a carbon market, I would say. So that's one of the key pillars that we have, and we are proud to be on it, but also we are not stopping at this point. We are also putting a target to reduce our carbon intensity by 15% by 2035. So that's one of the key pillars. The second one we have is, the energy efficiency program itself. There is a lot of things in the processing facilities that require energy efficiency solutions, and we also have a lot of solutions when it comes to the processing facilities itself. The third one we have is, as you know, the renewables. We are part of the program. Riham mentioned about 50%, the kingdom target of electricity coming from renewable. We are part of that investment with Public Investment Fund and Aquapower. We have a target of 12 gigawatt by 2030. And the fourth one is the CCUS. And I think we talked today a lot about the CCUS and the future and the importance of CCUS in the future. And we walk the talk now, and we set a target of 9 million ton CO2 equivalent annually by 2027 by having a project with Linde and Schlumberger, and the project is in Jubail as a hub to collect 6 million from Aramco and another 3 million from the surrounding industries. And for those don't know about the CCS, to scale it, you need to create hubs, because you cannot do it in isolated, then you will not have the scale. So we move toward the hub concept when it comes to the CCS. The last pillar, which is related to your questions, is the offsets. At the end of the day, you will not make your carbon emissions zero. It's impossible. And we all have to know this. Today, if you talk about the Global South in terms of energy demand, they are 80% of the energy demand coming from Global South. In 2050, it will be 90% coming from Global South. Do you think they will decarbonize and have carbon emission zero? Of course not. So definitely offsets, and it has to be part of the solutions. We believe in this. It's complementary to us, and that's why we are part of the carbon market, as you see today.
So Michael, I know we heard earlier about this whole issue of transparency, price discovery, and it's interesting. I don't think, if I know Vitol well enough, you are in upstream in everything else you do, but you are in upstream in this. So what are you learning from your experience so far?
So I would say that one of the potential misnomers is that there is a carbon market or there is a carbon price. Very clearly, the lowest price of carbon we've seen is $1, let's say. The highest price is that we've seen is in hundreds of dollars, maybe even thousands of dollars. So I think there isn't one carbon market, but I think it's the responsibility of at least the trading community to look at all the rules, regulations, look at what do we think the trends are going to be. So it's been mentioned many times today, corresponding adjustments, Article 6. It's the role of the trader and the investor to look at what they think the probability is that trend X happens over trend Y. And you, frankly, allocate your risk accordingly, and ultimately that's the role of a VTOL, a trader, because most of the emissions that we're linked with are not VTOL emissions. We are neither a producer nor a consumer. So really, we will be doing the same thing, and we are doing the same thing with carbon credits that we do with other products, which is people that have the ability to produce them, we're buying them, and we're developing the projects with them. We have one of our partners here from Nigeria, the Nigerian Sovereign Wealth Fund, Mariam, who was on a panel earlier. So we're going to where the possibility is, as I said, upstream to generate these credits, but we're also working with people who need the credits. So as was said, you can only get so far in terms of your own decarbonization, and then the residual you fill with the carbon credits. So in the classic trader VTOL way, we're looking at customers both on the supply side and on the demand side. The slight difference is we have to do a lot more work than the typical markets, because those markets, quote unquote, don't really exist today.
So one quick follow-up to that. Are there differences between sort of the markets in Europe versus what we are trying to do in the South, and what could the South learn from the North, if you will?
So again, I think there was almost a semantic debate in Riham's discussion with Bill around whether do we need regulation. And if regulation means that the government comes in a very heavy-handed way and eliminates the ability for markets to act, I would agree. But I think we have a chronic lack of clarity. If you are a large corporate in Europe, at the moment you're sitting there thinking, well, I made these commitments to 2030, I made these commitments, but as soon as I do something, I'm now on the front of a German newspaper, a Swiss newspaper, a British newspaper, being criticized for something that I thought in good conscience I was doing correctly. So I think there needs to be not so much a safety net, but a mechanism by which the corporate can say, look, these were the rules, and whether that's the regulated rules, voluntary rules, but just something that can be agreed with, because you're never going to get away from the people who don't like markets linked with climate anyway, so that's something you can't do. But I think those corporates, the buyers, the net buyers, need some coverage so that they can say, look, I'm not doing anything other than the rule,
following the rules,
according to the rules as they have been set out.
Yeah.
And I think that's the big thing that would really help.
Yeah. So Musa, I want to go to your thinking for going into these auctions, the two auctions. What led you to do that? And I mean, without revealing any secrets, can you tell why were you so interested? And you were the winner, right? The first auction here.
There are multiple reasons for this. I think the first one is
Both of them, yeah.
Both auctions we are the first buyer.
Riyadh wants to be clear, yeah.
But
they won
I
everything,
think,
okay?
I think it's first of all the belief in the market. We believe that Saudi Arabia can host the biggest market in the region. From Riham, I think, talked about it with Bill Winter. From supply, from demand, this is the place. And we believe in Aramco, this market will be mature in the future, and it needs anchoring buyers to start with. And we decided to be one of those anchoring buyers to enable this market. That's from one side. The other side is basically we want also to make sure we buy in the right time, we buy with the right quality, and what Riham said maybe initially that we felt comfortable on the quality of the credits we bought. When we have a dialogue with the RVCMC as well as PIF initially, that's before RVCMC being established, we had a dialogue about how they are qualifying these credits. And the insurers, which we saw, basically having two agencies to qualify these credits, and we even do internal assessment.
So you're doing your own kind of due diligence.
We do our own, we develop, by the way, just for those to know, we develop huge capacity inside the company for carbon market because of this. And we have organization today called Carbon Market Organization in Saudi Aramco that focusing on carbon credits. We developed internal guidelines for ourselves to see what quality of credits we want to buy. So, and it's difficult. The standard is evolving, but yet we need to develop our standard. And for those who don't know about Aramco, Aramco is a process-oriented company. Everything by standard. We don't buy anything without looking very carefully in the quality. So I think...
we know well.
You know it very well, as S&P.
Please, go ahead, yeah.
So that's, I mean, enabling is number one. Feeling comfortable with what we are buying at the right time, the right price, as well as second one, especially the Africa one. We want to have footprint in Africa when it comes to participating on that continent. That continent needs a lot of energy. They need energy access. We are talking about it all the time that affordable energy access is important and critical. Yeah. And being in Kenya, the Nairobi, especially in second auctions, I think it meets the objectives that we are talking about.
So Michael, one of the things I see is that in the South, there'll be a lot of sellers, right? So what will be your advice to them so that they get a fair price, they have high quality projects, and pass through the due diligence you and Musa were talking about?
So I think the first thing I would say is you need to pick your partners very, very carefully.
Okay.
I think one of the problems that the carbon markets have faced, which is not specific to carbon markets, is in all nascent markets, it's a gold rush. And you know what happens if people think there's a gold rush, they cut corners, they don't necessarily do everything as rigorously, and frankly, there aren't the systems in place to ensure that there's policing of that being done absolutely correctly. Mm-hmm. But again, I think that the market itself is cleaning up its own stables, the Algin stables. I think we will get there. But what I would advise for host countries and developers is you have to pick the partners carefully. You have to make sure they have the bandwidth to make the investments, to support you in the process. I would personally avoid the kind of race to the bottom, bargain basement approach. I think they have to look at it as an asset, and they have to make sure that, contrary to previously what's often happened, is a form of colonialism in terms of commoditization, and that they sell out too cheaply too soon.
Yes.
But frankly, I would also flag to the buyers, if you've bought something too cheaply, good luck getting it delivered. Because if you think you've bought an X and it's 10X, 20X, particularly when it comes to these corresponding adjustments, where you will need the government to actually sign the paper, it's caveat emptor. You need to be careful that you don't sell too well, i.e. the buyer will never perform, and you don't buy too well, i.e. the seller will never perform. So coming from a commodity background, you need to make sure that there's something in it for everybody. There has to be something in it for the buyer, there has to be something in it for the seller, and the poor little intermediary, there has to be something, left for us. I'm just teasing. Left for us as well. So yeah, I think everybody has their role, but for the host countries, I would, have a look at things, get advised, find good, solid partners, and I think that's the key.
I would say that nobody is going to agree with the characterization of Vital being the poor intermediary, but we won't go there. So one quick follow-up, Michael. There's a lot of discussion about blockchain helping with transparency and all the process and things you're talking about. What is your sense? Are we getting there with blockchain, or is it still further away?
I think blockchain is the solution to the problem that we haven't yet resolved.
Okay.
So I don't know whether that makes enough sense to everybody. I think there are other issues to be resolved.
First.
Because if I won't swear, but it's like a classic model. If you put nonsense into the model, you'll get nonsense out of the model.
Yes.
Or if the model's nonsense itself. So you might have an absolutely robust blockchain, but if the data in it's false, it doesn't help you. You can transfer it 1 million times, but it's not going to help. So I think the key thing is to sort out the data first, sort out the integrity, the mechanisms that are essential for that, and then blockchain can be a mechanism for it. But I don't think it's the sine qua non. It's not the thing that will make everything else fall into place.
So, Musab, you talked about your 5 pillars and how carbon markets fit in that. Do you see Saudi Aramco going, global, or you want to focus more on the south versus the north? Say a little bit about its strategy.
When it comes to carbon
carbon
credits?
markets, yeah.
Okay, so definitely we are supporter of the Saudi market.
Yes.
That's our priority. We want to
grow that market.
We want to grow it.
Yeah.
We want to make sure we enable it, because to Rihan's points in the previous panel, fragmentation is the key issues of the market. And I think the seeds for growing this market is here. That's the first thing. When it comes to a global, looking to the global side, when it comes to carbon credits, this is probably where will depend on also our affiliates. Like as a company, we have a global footprint. And those global footprints, affiliates we have, they have their own requirements when it comes to the offset. So we have to meet the requirements of the affiliates that in some jurisdictions require certain credits from certain regions, but that will be a dialogue between us and RVCMC to see what are the basket of credits that we need to meet our requirements, either as a parent company or also as affiliates across the globe. So definitely will be globally.
Yeah. Okay. Michael, one of the things I'm wondering is as the global south market here in Saudi grows, what advice would they have as they start to set up their exchange and all the mechanisms so they have more regular, more frequent and bigger auctions and more regular exchange, actually?
Well, I think their team's so big they don't need our advice. But
you are an experienced trader, that's why I'm asking you.
Yeah. No, I think, again, it's, in terms of being able to trade, you need to standardize, some form of standardization. Mm-hmm. That's the first key thing. Anybody who is buying needs to be confident that what they think they're buying when it comes off the exchange is what they get. And frankly speaking, anybody who's shorting or selling into the exchange, particularly on a future forward basis, is confident that they will be able to deliver what they think they've hedged. So I think, again, that's all kind of very simple and basic, but they're the key things. It takes a long time to build up, as we're seeing with the voluntary markets in general, it takes a long time to build up the confidence. It takes hardly anything to crush confidence. And as soon as liquidity flies, it's very difficult to bring it back. So I think, again, standardized contracts that people need and help them hedge, help them manage their risks, and then make sure, again, integrity being the word, when you buy, you know what you're getting, and when you sell, you know what you're able to deliver.
Yeah. One other slightly related question. When we heard earlier today about the European border adjustment, do you think that will help grow the South market because there is going to be the carbon border adjustment mechanism?
I think it will encourage, I think it will make people focus, or other countries focus who are delivering into Europe, what they need to be doing in their own
outside
to make sure, why pay the Europeans the tax? Why not spend that? If you're going to import to Europe anyway, spend the money at home rather than paying Europe the tax or the equivalent of the tax because you have to buy the carbon credit. So I think it will have an impact on that, but I also suspect the big blocs will act accordingly. US will do something similar. You're already seeing, I think I was reading the other day that imports, Mexico has now overtaken China in terms of imports. That's completely driven by America saying, right, we want to repatriate certain things that we're buying from China. Yes. So whether you do it through carbon, whether you do it through these other, I think this kind of protectionist world we live in, whether it's manifested through carbon or through other things, will continue. China, US, and Europe.
But there is also some protectionism in the market itself here, right? For example, some countries are saying these credits are for us. So how do you think that's going to impact?
I think we live in a world that is protection. I think we live in a world that's moving away from freer global trade into blocks, into tighter control over where it's being produced and protectionism in general. So I don't think that has to necessarily inhibit carbon markets, but obviously it would be wonderful if you were able to produce carbon credit in country X, deliver it to country Y, when the value goes down in country Y, and then, like, again, I'm biased, but be able to arbitrage these things between different jurisdictions and different, now you can have ripples in it, but I suspect we're going to have very little exported from certain countries and very little imported by certain countries from certain countries. I won't name names, but that's my suspicion.
Yeah. So, Musab, maybe last question to you. You talked about the importance of carbon credits more globally, but there is a criticism of the oil and gas industry that this is a low-hanging fruit, it's a cheap and easy to do carbon credits versus real removal like CCS, other things. How would you respond to that criticism?
Our response is very simple. We are the lowest carbon intensity, so we are there already. I mean, if you talk about reducing the carbon footprint, we are there. And we're even going further toward that directions, as I mentioned, by reducing it 15% to the 10.3 that I talked about.
Yeah.
I think we are walking the talk, but criticism will continue to be there on the industry in general. But reality is, the energy, the oil and gas is needed in all scenarios that we are talking about. Who will win at the end? The lowest carbon intensity and the lowest cost from affordability perspective. And we cannot ignore the offsets because the carbon footprint will continue to be there regardless. It could be the lowest, but still there is residual that will continue to be in the carbon emissions. So I think the response is you need both. You need to reduce carbon emissions as well as you need to basically have an offsets. And I think that the point, Atul, we talked about, the whole industry needs to work further when it comes to the carbon intensity. And I think that's how we'll prove that it needs to be both carbon intensity reduction as well as the carbon offset.
Yeah, so important point to make is that even though you are the lowest intensity, it's not going to be zero, right? Absolutely. Producing hydrocarbons requires consuming hydrocarbons, consuming energy, which has some carbon footprint. But you are setting the standard for the rest of the industry to follow, and you see overall the mix of the 5 pillars you said, credits are a part of it. So we have a few minutes for any quick questions from the audience here. All right, Riham has please can you bring, I thought everything was so clear with this wonderful panel that you didn't need any questions, Riham, but there you go.
It's my role to ask a question. So I really commend you both. It was a very enjoyable session, really like that. Just a question for Musab about Aramco's role in establishing the voluntary carbon market here in Saudi Arabia. What did you see to help in that journey as a company? And I know you're supportive of it, you want to grow it, but why would an oil and gas company look into a voluntary carbon market and establish it in our region?
Very good question, Riham. And I think we are, as I mentioned before, that as an oil and gas, we are in the leading position when it comes to the carbon emissions, I would say. But at the same time, we are the highest producers of oil. The issue is people sometimes see absolute emissions and they don't see the footprint of the carbon emissions from intensity perspective. You have to solve for both. You need to produce oil because you need it. You need it especially in Global South. 80% today is going to Global South. And it will not go away. I mean, that will continue to be. So we believe on this. So you need to push that oil. But you need also to push to how to reduce the carbon emissions. So from day one, we believe on that you need an offset. You need an offset not only for us, for everyone else. For us, it's, as I said, it's complementary, but it's needed. But also to your point today, I think it's financing tools for all these suppliers that will come in the picture, including the ones that we are doing today in Saudi Arabia. I will give you the example. In the past, we were doing a lot of things in Aramco since 70s. We were doing mangroves. We never think about generating carbon credits from mangrove. We are doing it for the environment. We are not trying to monetize anything out of that. CCUS, when we did the pilot project in southern Saudi Arabia, southeast, this project we want to prove the concept of CCUS. And we never think about how we can monetize it from carbon credit perspective. But now, the scale is getting up. You will produce more energy. You need more solutions when it comes to the carbon emissions. For example, the hydrogen. The hydrogens, I would say, is a big concept, needs to be supported by carbon market. Otherwise, there is no off-taker today for blue and green hydrogens. It's very difficult to find off-taker. You will find abundant supply, but then demand will not be picked up unless there is incentives for these buyers to have, and carbon market will be a supporter for that. I hope I answered your question.
Maybe since there are no other questions, quick question for you, Michael. What, in your view, will be success at COP on Article 6 on the trading front?
I think I was having this discussion just before. I think expectations have been set so low for COP
Everything is success.
that almost, it won't take much for people to be banging the drums and saying it's been a great success. I think as one of the major themes is that anything which helps regulatory, and again, without getting into semantic debate, anything which pushes that in the right direction, enables buyers to have more comfort, enables investors to have more comfort, and gives them a bit of coverage that they're not going completely out on a wing, and they're doing it within the confines of something that they can stand up and say, well, look, I was following these rules, X, Y, and Z, and these are bona fide, and etc. But I would just say, maybe one of the things to add for the Global South is there's so much criticism of carbon projects very often, and again, I'm based in Geneva, so we have no shortage of NGOs, and they're very focused on the Global South.
Yes.
They're completely missing the trick that this is an opportunity to put in billions, trillions into the Global South. And I'm not saying that coming back to my previous point, not in an expropriatory way, not in a way that's saying, okay, you've got this, we're going to buy it for nothing, and we're going to take it, and we're not going to do anything on our side. No. This is a huge opportunity, but if the desire for perfection destroys the ability to do good, then sadly, a lot of those flows won't happen. So that's just something I would advocate to others who still denigrate the...
Yeah, I think it's a terrific point, and I just want to add this, reinforce what you're saying. Last week I was at Africa Energy Week, and there is a lot of discussion about Africa's natural capital, and I'm sure you're seeing a view that should be included in the GDP of these countries. And I think we will see this whole debate move forward. And I think overall, I think it'll be good, because the South has a very strong case to make. They need an equally strong voice. And let's hope at COP at least a little bit of progress is made. Even that will be good. With that, can we thank this great panel, covered a lot of material.
Thank you very much.
Thank you.
Thank you.